Get rid of student loan debt. The most difficult aspect of dealing with student loan debt is not making payments on it. The difficult part is navigating the complex world of student loan repayment. There are numerous repayment plans, student loan forgiveness programs, state-specific options, and other resources available to assist you in repaying your student loans. Every student loan story I hear is the same: I have this debt and I want it gone. You certainly do. I'd like it gone for you. But where do you begin? I wanted to break down the best strategies for getting rid of student loan debt. Perhaps these apply to your situation, and you can use this guide right away. Not all of these will pay off your entire student loan debt, but each will help. 1. Be eligible for federal student loan forgiveness. The first method for getting rid of student loan debt is for people who have federal student loans. These are student loans that are typically serviced by the Department of Education or a student loan servicing company. These include numerous student loan programs administered by the federal government. There are 3 major student loan forgiveness programs, as well as several smaller ones. Public Service Loan Forgiveness is the most popular federal student loan forgiveness program. This program provides student loan forgiveness to people who work in government for 10 years. Public service includes not only government jobs, but also many nonprofit jobs, education jobs, and service jobs such as law enforcement or public safety. The other 2 common ways to obtain federal student loan forgiveness are to be a teacher, which has its own teacher loan forgiveness program, and to serve in the military. 2. Look for state aid for student loans. Many states also have different student loan forgiveness programs available for your student loans. 46 of the 50 states have at least one program, with some offering multiple programs to cover a wide range of loan types, employment, and other factors. In fact, Kansas offers up to $15,000 in student loan forgiveness just for living in certain areas of the state. California, for example, provides student loan forgiveness to doctors, nurses, and dentists. Meanwhile, professors, speech therapists, nurses, doctors, teachers, and lawyers in Texas are eligible for loan forgiveness. Or, and this is my personal favorite, Maryland offers loan forgiveness when purchasing a home in Maryland. Before you give up on not qualifying for federal loan forgiveness programs, check with your state to see if any incentives or assistance are available. State student loan forgiveness. 3. Determine whether your employer provides tuition reimbursement. Did you know that an increasing number of employers are providing tuition reimbursement to assist their employees in paying for school? Because I worked full-time while pursuing my college degree, it was one of the ways I paid for school. Some companies, such as Starbucks, even provide full-fledged degree programs as part of their employee benefits. Even better, some companies are now offering student loan repayment programs to their employees, in which the company pays off a portion of their employees' student loan debt. Working while in college is one of the wisest decisions any student can make. But if you're already working, make sure you're taking advantage of all your employer's benefits, and see if a tuition reimbursement program can help you eliminate or reduce some of your student loan debt. Many of these programs require you to pay in advance and then provide proof of course completion to your employer. When you finish the class, your employer will usually reimburse you through your paycheck. Already finished with school and drowning in student loan debt, some employers provide signing bonuses and other benefits to prospective employees. But you must inquire. Along with negotiating your first salary after graduation, you should check to see if your employer will assist you with your student loan payments. 4. Merge your federal student loans. Consolidating your federal student loans is the next option to try to help you eliminate your student loan debt. While consolidation will not help you reduce your payments or your student loan balance, it will allow you to be more financially organized. You've probably already signed up for your first student loan by the time you start college before your freshman year. Then, each year, you sign up for a new student loan. If your federal student loan does not cover the entire cost of your tuition, you most likely have private loans as well. That means you could have 4 or more loans with different payments. How perplexing. Worse, each of these loans may have a different payment amount and due date. If you miss just one payment, you risk damaging your credit score and jeopardizing your financial future. 5. Find a repayment plan that suits your financial situation. Finding a repayment plan that matches your ability to pay is the next step in eliminating your student loan debt. You are automatically enrolled in the standard repayment plan after graduation. The problem is that many graduates are unaware that they can change their plans. They simply assume they are obligated to make that student loan payment. If you have federal student loans, there are many repayment plans available to help you make your student loan debt more manageable, allowing you to pay off your debt faster. If you expect your income to rise in the years following graduation, you could consider a repayment plan like Graduated, which has a lower initial payment that rises over time. If you want a lower monthly payment but are willing to pay it over a long period of time, consider the Extended Repayment Plan. 6. Create an income-based repayment plan that includes student loan forgiveness. The problem is that many graduates are unaware that they can change their plans. They simply assume they are obligated to make that student loan payment. If you have federal student loans, there are many repayment plans available to help you make your student loan debt more manageable, allowing you to pay off your debt faster. If you expect your income to rise in the years following graduation, you could consider a repayment plan like Graduated, which has a lower initial payment that rises over time. If you want a lower monthly payment but are willing to pay it over a longer period of time, consider the Extended Repayment Plan. 6. Create an income-based repayment plan that includes loan forgiveness. If none of the above standard options work for you when choosing a repayment plan, federal loans offer income-based repayment plans. There are several variations, but the most common are income-based repayment and pay-as-you-earn. The great thing about IBR and Pay is that they both provide a hidden benefit, student loan forgiveness. Many people are unaware that both of these plans include student loan forgiveness at the end of the repayment period. Any remaining loan balance will be forgiven, but unlike the other federal student loan forgiveness programs, you will be required to pay taxes on the amount forgiven. In either case, this is a fantastic benefit. You simply provide proof of income with both of these plans, and the Department of Education calculates a monthly payment for you that is 10% of your discretionary income. That means you'll be able to afford your monthly student loan payment. You must resubmit your income every year, and your payment may increase as your income increases. If you work in government, enrolling in IBR or Pay and combining it with PSLF is one of the best ways to reduce your student loan debt. 7. Consolidate your student loans. If you have private student loans, the best way to start paying them off is to refinance them at a lower interest rate. This not only saves you money and interest over the life of the loan, but it also lowers your initial payment. One of the most effective strategies is to refinance your loans at a lower payment while continuing to pay your previous payment amount. This could potentially save you hundreds or thousands of dollars by reducing the length of your loan. One of the most serious concerns about private student loans is that the majority of them have variable interest rates. We've compiled an in-depth explanation of variable rate private student loans and how, in most cases, the money saved by the lower upfront payment is almost always worthwhile. Only in very rare cases will your variable rate payment be greater than your fixed rate payment. 8. Increase your earnings. Finally, if none of these options work, earning more money is the next best thing you can do. I am a firm believer that if everyone tries, they can earn an extra $100 per month. That extra $100 per month can be applied to your student loan debt, reducing your loan balance by $1,200 per year.